Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 3rd of October 2016, ending Friday the 7th. Just so you know, that means that options expiration this month will be on the 21st, the main expiration. So we'll look at options unraveling on the 19th to the 20th. Got a full month here. The only holiday is the Veterans Day or whatever, I believe, or something like a bank holiday that's not really a holiday. So we'll see what happens, but it's a clean month. This is usually one of the better trading months of the year, and so just stay focused, and let's see what we can get. Hopefully things will pick up, and they'll be a little more interesting. Sorry, it's Columbus Day, where the stock market is open, but the banks and everything are closed. That's Monday the 10th, a week from this coming Monday. Here's a look at the ES front month futures contract. This is the daily chart of the market in raw form, as it should be. This is the way to technically look at the market and what's going on. And here we are. We are exactly where we were at the beginning of July. We basically spent the quarter and went nowhere. I think we lost like 8 points on the ES for the month of September, but dead flat since basically since early July or right after the 4th of July. We've been in a very narrow range. Even when we got the 13 sell signal, we went down for a couple days. We've not made it back over the risk line. We've not gotten a new 9-bar startup phase. We've not hit the red static trend line. It is just really, really horrible narrow action. 60 points in range or so, 70, 80 maybe from high to low in that area. Just not a great trading month. Trading 3 months, 4 months. All right, let's go through the major indices on the daily. Then we'll look at what happened on the week. Here's crude oil up 42 cents to 48.25, coming near the highs of the last 2 months. Gold down $5.10. It's been very flat as well. S&P gained 17 to close out the month. Again, let's just take a look. Remember, September is historically one of the most negative months of the year in the market. August closed at 2170.95, and we closed 2168.25. So we lost 2.5 points for the entire month of September. So we hold the statistic that September, historically speaking, has negative returns, but it's only 2 points on the ES or S&P. It doesn't really matter in the greater scope of things. It's certainly not as negative as it can be sometimes in September. Here's the NDX, NASDAQ 100, very near all-time highs, 48.75, up 37 points on Friday. SOX gains 12, almost 13 points. That is new highs. Here's the biotech index up 34. That's not new highs. We had a 13 sell signal on that, and you'll notice that was just over a week ago. We did come back down from that point. The VIX loses back 73 cents to 13.29 after popping up on Thursday. Trend gets close at 0.83, which is really low. We're going to start dropping off some higher numbers off the VIX 10-day moving average. So right now the moving average is 1.05, but that can drop quickly. So let's be aware of that. Volume on Friday was 1.87. Biggest of the week, but again, a lot of that's just some month-end window dressing junk. NASDAQ advanced decline ratio was plus 1320. New York advanced decline ratio was plus 1242. Google gains $1.42 to 804.06. Apple gains 87 cents to 113.05. Again, pushing these big stocks that are high at highs up just a bit for some great end-of-quarter prints to pay those money managers. Amazon gains 8.26, all-time high on Amazon again, closing high to close out the quarter. Netflix closed well, also up $1.88. All right, let's look at the intra-week action. This will be 10-minute candles once I adjust the chart here so we can see what happened for the whole week. Monday, gap down, back and forth, low flat. Tuesday, fairly flat opening, shot up, pulled back, came back up. Really. Wednesday, small gap up, didn't quite fill the gap still from Monday. Filled the Wednesday gap, went a little lower, came back up. Then we filled the gap from Monday's opening from Friday's close. Closed right about even for the week at that point in time. Thursday, back and forth early. Look at how boring the first hour or two is almost every day this week. It's just not in our normal trading environment. We did dip Thursday in the afternoon and then came back a little bit for the close Friday. Small gap up, did not fill. And we ended up closing pretty much where we closed the prior Friday, within 3 or 4 points of it. So it's a pretty uneventful week on the broad market. All right, let's take a quick look at the NASDAQ side. Not much different, closed a few points higher. It's almost identical. It's just been a really boring week from that perspective. All right, let's take a look at economic data coming out this week. So Monday, new home sales 30 minutes in. Tuesday, this is last week. Let's take a look at this week. Monday, ISM index and construction spending, 30 minutes in. Auto and truck sales at 2 p.m. Eastern. Tuesday, no data. Wednesday, MBA mortgage index, ADP employment change, trade balance. an hour before the bell. Factory orders, ISM services 30 minutes in. Crude oil inventory is an hour in. Challenger job cuts on Thursday, initial and continuing jobless claims, and the natty gas inventories. On Friday, we've got non-farm payrolls with the unemployment rate. That's one of our bigger numbers every month, so that'll be important for a potential gap on Friday. Wholesale inventories, and then consumer credit in the afternoon. So what does that mean for this week? Well, we're past the end of the quarter. We're into the part of the year that's usually exciting. Usually by now we'd be selling off. That's just the general time of year for that to happen. And then you bottom out the second week or so of October and then rally into the back end of the year. That clearly hasn't really happened yet. We're still under the 13 sell signal on the broad market, but we're not going down. So how do we handle this week? Well, we just do what we always do. Watch volume, see if it starts to improve, see if the action starts to widen out. Are we really going to be slow all the way until the election? I mean, I think we all know how the election's going to play out and what it's supposed to mean. You know, obviously, I think everybody that understands this stuff knows that, you know, a Clinton win is pretty much status quo for the market. Status quo for the market. A Trump win is probably a big negative for the market. There hasn't been any signs that he's actually been close to winning at this point. He's never really led in the national polls. This debate this week didn't help him out. So I think at this point in time, the market is just assuming everything is going to be status quo and keep moving forward, which is good for us and good for the stock market. But, you know, anything can still happen in 4 weeks. That's what they call them elections for. You have to actually do the voting and see what happens. So maybe the market's sitting on the sidelines until then, maybe not. But we'll keep you up to date on the business ramifications of and the market ramifications of the election as they start to play out, as we do every election year. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.